This is Peter Arender. I'm Chief Investment Officer with Fortress Fund Managers. Well, this week I thought it'd be good to talk about a recently added and reasonably large holding in our fund, Berkshire Hathaway, and Caribbean Growth Fund, I should say, because they had their annual meeting this year. This has become quite an event for investors over the many, many years that Warren Buffett and Charlie Munger have been running Berkshire Hathaway. And they had some pretty important messages for investors, none of which really were surprising, but I think they're worth mentioning today. The first was a caution to new investors because in this part of the cycle, we've had many, many new investors come and buy individual stocks and trade them. And the caution was that you often don't know as much as you think you know. And it was a real strong argument that things change over many, many years and a strong support for the idea of diversification, owning a lot of different positions in something like a fund, rather than trying to pick individual stocks yourself. The second observation was about the current fad for SPACs, special purpose acquisition companies, that are muddying the waters by overpaying for private companies, making it tougher for big companies like Berkshire to spend their cash on well-valued companies. Strong argument for paying attention to valuation. And why is valuation important? It's important because of the distinction between a good company and a good investment. And that's at the nexus of kind of activity we do at Fortress as well, which is trying to find good companies at good prices. And that's an argument here, again, that we're at the part of the cycle where that is especially important. Over the last week, the higher price technology shares again were under a bit of pressure. The more boring, better valued companies where we focus about unchanged. I think you'll see the Fortress funds little change this week, and that is it from here.